Once again, it's become a difficult market to navigate in terms of unpredictability. It seems like oil is leading the way once again. I guess that much we can predict. How do you play these markets?
Yeah, absolutely right, Julie. I mean, this is a oil-driven market. I think oil representing kind of that risk-off, risk-on sort of trade here. So I think we're in a big trading range until further notice with a lot of whips. Certainly today, you know, we had the S&Ps down over 10, now poking up over 10. Once oil kind of found a bid and headed higher, the market came along with it. So until further notice, I think, you know, sell rallies and buy dips until we break out of the trading range.
And what would change that at all? If we did break out of the trading range, is that the key that you're looking for?
Yeah, absolutely. To the upside, we have minor resistance at kind of the 1940 level, certainly 1970, the big number to the upside. To the downside, 1810 is kind of that triple low. So, you know, really until then, we have the VIX back above 20. Last week, we had it the first time really below 20, the lowest level of the year. So, you know, the market's kind of, I think, just about right here. You know, I think, you know, just we'll chop around until we get direction. Expensive stocks versus very cheap money.
And in terms of cheap money, where you're putting your money, that is, you're looking to large cap technology for your trades today. And this is a group that really has been leading to the up and to the downside on days when we've seen a lot of movement. Facebook is the stock specifically that you're looking at here. Why, first of all, Facebook as a proxy for what we've been seeing right now versus, say, Amazon or one of the other large cap tech stocks?
Yeah, Facebook, you know, is either number 5 or number 6 as far as the largest market cap U.S. stocks here. We had, you know, kind of the Mark Zuckerberg ahead of Warren Buffett from a market cap perspective for a while. But I think given the fact that Facebook is so big but trading at such a big multiple, you know, that 115 area that we saw as the all-time high, it'll have trouble getting past there. So I'm positioning with an out-of-the-money call spread, selling the April 115 calls, buying the 120 calls for protection, getting about 70 to 75 cents here, and just looking for Facebook to have trouble making an all-time high in this kind of market environment, given the size of Facebook. Law of large number absolutely apply, I think, to this stock.
What's the time horizon? I'm not sure if you mentioned the time horizon on this trade, because if stocks do break out to the upside, given how large cap tech has been performing, one could probably assume that some of these large cap tech stocks would again be leading.
Yeah, absolutely, and it's out till April, so we got about a month and a half, and we can see on the chart, right, you know, where to kind of hang your hat. When Facebook was going up day after day, it was hard to take a counter-trend position. Now that 115 is being established, that's kind of the stop-out level here, so if it does break out to new highs, we'll cover that trade, take a small loss. If not, we like the risk-reward trade-off here.